Good day and welcome to the CNBC Africa Special with myself, Fifi Peters. Today we are coming to you from the current headquarters of the South African Reserve Bank. We'll be speaking with the Governor Lesetja Kganyago about managing monetary policy in times of uncertainty. Uncertainty from changing political clouds, with more than half the world hosting elections in 2024. Uncertainties from geopolitical tensions and war, climate change and inflation that climbed to multi-year highs in the aftermath of the COVID-19 pandemic. I asked Governor Lesetja Kganyago for his reflections on the great election year of 2024. This is what he had to say.
Firstly, is that the global economy turned out to be more resilient than was initially thought. It did come a touch, the forecasts show that it is a touch below what, for example, the IMF had expected, but it remained strong. Secondly, had been that the much feared U.S. recession didn't take place, because there was this thought that to get inflation down in the U.S., you'll have to swing the economy into a recession. But what was seen as a soft landing for the U.S. economy, meaning that the economy continues to grow, but at a slower pace, but that inflation is under control, is what we are seeing. And lastly, is that central banks have succeeded in bringing inflation under control. And it was very important that is achieved, because the great inflation of 2022 left many a central banker in the advanced economies. It caught them by surprise. They spent the time trying to convince themselves that it was transitory, but in the end, they realized that inflation was a problem, and they had to be dealing with it. And I think that one of the big things for this year had been that central banks have been able to rein in inflation. If we are to bring that into South Africa in terms of what we had seen, was, I think for me, the big thing was the change in sentiment for South Africa after June. When we first experienced a week of no load shedding, there wasn't a shortage of conspiracies that this is a big election ploy. 250 days later and counting, we are having electricity, and that had helped to turn sentiment in South Africa. Again, if you looked at the global inflation picture, we had also been able to rein in inflation. Still, there are risks about, and those risks have to do, firstly, with the global situation. You talked about the great election year. Many incumbents either got voted out, or when they came back with reduced majorities. Sure. And it had created an expectation of how the future of policy is going to evolve in various key jurisdictions. And there had been noise of rising trade protectionism, and with a noise about rising trade protectionism, you will then see an impact on the global economy, because global trade is the lifeblood of the global economy. And how that is going to evolve with so many uncertainties about the future trajectory of policy is exactly what keeps central bankers awake. So that would be a reflection of 2024.
On the elections, and South Africa's elections specifically, and the outcome that we received in the establishment getting a reduced majority this time around, what does that mean then in terms of policy or monetary policy evolution under a government of national unity? Because this is the first time that you serve a South African Reserve Bank that is presided under a government of national unity. So does anything change?
Well, what is central bank independence for? It is meant for the central bank to withstand these tectonic political changes. And you have got to give it to the board of the South African Reserve Bank, which in its wisdom, towards the end of last year, decided to approach the president and say to the president, there are the elections coming, there is so much uncertainty, we do not want uncertainty to also engulf the future leadership of the bank, and can you make the following appointments? So precisely so that the central bank is insulated from those political changes. But still, even if we would have been caught in the trade-offs, the central bank is independent and is expected to act as such without fear, favor, and prejudice in pursuit of its mandate. So the government of national unity does not change the way in which the central bank operates. The central bank will continue to operate the same manner with its constitutional mandate that we will pursue without fear, favor, or prejudice.
Okay. So, again, dialing back to your comment around the economy, the U.S. economy, expectations coming into 2024 regarding a recession didn't quite materialize. But when we look at South Africa's economy, right now there's a lot of talk about the latest GDP print that came out, showing a bigger contraction in the agricultural sector than was expected, although there are subsequent comments to say that we could be seeing a revision in the months to come. The SARB's take on the GDP print is what, sir?
Understand that GDP figure and break it down. Both the secondary and the tertiary sector were still expanding. So the big drag had been agriculture. So if that's in case people forgot how important agriculture is for the South African economy, a 10% contraction in the agricultural sector pulled down what were actually sectors that were positive. And it's too early to make a call on the figures of one quarter, but particularly because the agricultural sector in any case is so volatile in terms of those figures. We will continue to watch the high frequency indicators and see what it actually means. The GDP figure did come less than what we expected. We actually, as the central bank, we expected an expansion in GDP, and so had everybody else in the market. And the shocker was agriculture. All of us, we got the agriculture figure wrong.
Okay, so it means that depending on what happens regarding possible revisions to the latest print, there could be possible revisions to your own estimates as the SARB.
Well, we have to because when we do a forecast, we have got to take account of the most recent figures.
Sure.
So we have received these figures. We will also have high frequency figures that are coming through and getting into the January MPC. We would have a new forecast.
You mentioned inflation as well, and you alluded to the fact that central banks had been successful this year in bringing inflation down. Our latest inflation print also quite favorable and very comfortably at lower levels compared to this time last year. So why then has the SARB not been more supportive of the economy in terms of lowering interest rates by more than you have been able to do?
Yesterday's inflation figure is exactly that. It's about the past. You do not make policy on the past. You make policy on the future. For the record, the figure came on the day after we had already made the decision.
Sure.
In any case. But even if it came before, we can't make decisions on the basis of a previous figure. the future trajectory of the economy is pretty uncertain for both inflation and for growth. There are so many moving parts. We are not clear about what is going to happen to the global economy as a result of changes in policies that we are not even aware of. We just know there is going to be a change in policy. We're not sure what those changes are and what their impact is going to be. And the result is central banks have been very cautious globally, and so had the SARB. And in the previous meeting, we highlighted risks to both the economic outlook and to the inflation outlook. And you talked about this figure. I thought that I had tried to prepare the South Africans for a figure like this. Sometime in October, I did point out that we are going to have a number of inflation prints with either a handle of 3 and possibly even a handle of 2. And that is what we have. So the forecasts that we have of inflation had this thing. The figure came out at 2.8. The SARB's own internal figure was that this was going to come at 2.9. So
sure.
For us, that is what we had expected. Without a doubt, monetary policy is still in the restrictive territory, whichever measure that you use, and it is exactly that had provided us with an ability to reduce the policy rate and provide a support. And you said more support. Well, that was additional support. Remember that we provided support in September, and came November, we provided further support. And people say, oh, you could have been bolder and did 50 basis points. That was in September. Well, we had done 25 basis points in September, and we came to November, we did 25 basis points, and guess what? The thing still comes. Oh, you could have been bolder and did 50 basis points. 25 plus 25 is 50. And in an environment of uncertainty, it's very important for the central bank to move with caution and not add to the noise that you have in the data and the uncertainty that is actually engulfing the world of economic policy making, and be cognizant of the fact that we should not be creating uncertainty by making moves that we would later regret. The inflation trajectory is a good one. We expect that the growth will continue.
Sure.
And with that we believe that the policy adjustments that we have done are appropriate ones. And lastly, it just strikes me at times that people say that you could have been bolder. Well, the same question was not being asked when inflation was going up, and say that, come on, inflation is going up, be bold, take much tougher steps. And the beauty of being a central banker is that you do not have a shortage of advisors, and in my case, 60 million of them. All that means is that I just have to process all of that advice from 60 million people and make the appropriate decisions.
And it's good to know that you do take the advice of the 60 million into account. We are very heartened by that. Just one last question on inflation, sir. Regarding the inflation target, there is a process currently underway regarding that review. Can you give us just any timelines or finality on when we'll have an outcome with regards to inflation targeting?
Well, I do not have a timeline. The most important timeline that you will get would be when a decision is made to say this target would be achieved over this period of time. That process must be allowed to evolve. The teams of the Treasury and of the Reserve Bank are hard at work, because people are asking all sorts of questions. At what cost would this thing happen? People are asking questions. What would be the welfare gains from the lowering of a target, and will there be any welfare losses from that? And people are asking questions. If you are going low, how far low do you go? And people ask questions and say that, oh, but we are a developing country. Why should we have a lower inflation? And teams look and says that, oh, there are other developing countries that are having inflation targets that are less than ours. What is no doubt is what the median from emerging market is, and the median for emerging markets is around 3%,
okay.
And for developed countries it is 2%. What is in no doubt is that the public hates inflation, and given a choice, the public would prefer price stability. Mm-hmm. And that is exactly what central banks should deliver, price stability. Inflation at levels that are higher than those of our peers, I'm afraid, does not begin to define price stability.
Okay. Since the last MPC in November, sir, we also heard from another ratings agency, Moody's, that maintained its sovereign rating on South Africa as well as its outlook. A lot of the economists in the country see or deemed it to be a positive statement from Moody's. Can you just square your assessment as the SARB on what the latest developments from Moody's and S&P are with regards to South Africa's economy, and whether you are in agreement and alignment with the consensus view that these are positive developments from the ratings agency?
In agreement, Fifi, when the Weather Bureau tells you it's going to rain, it doesn't matter whether you agree with the Weather Bureau or you disagree with the Weather Bureau. Prepare yourself for the rain if it comes. And rating agencies are almost like the Weather Bureau of your credit standing. They will tell you that your credit standing is improving, and because it's improving, so is your ability to service your debt. And if it is deteriorating, they will tell you that your credit standing is deteriorating, and so is your ability to service your debt. What South Africans and commentators should be clear about is that South Africa's credit rating is within the control of South African policy makers. It is the policy decisions we make as as policy makers, and whether those policy decisions get implemented responsibly, and that you are able to demonstrate progress. And I think that the pronouncements from the agencies still reiterated all South African strengths. It was striking. Both of them talked about the strength of institutions, and they said particularly the South African Reserve Bank. And when that comes, and the people who say to you, you are having a strong credit, and you are having a strong credit because of this institution and the work that they do, it's something that, yes, South Africans, we should embrace and actually say, if this institution is doing so well, why can't we get the other institutions that are tasked with particular responsibilities to do well in their areas of responsibility? So I talked about how the sentiment had changed in the second half of the year. Consumer confidence, business confidence, the return of bond inflows to South Africa, that clearly didn't get unnoticed. And as you had seen, Standard & Poor's upgrading its outlook, Moody's maintaining the outlook and the rating, which is in any case above that of Standard & Poor's, tells you that some hard policy decisions that had been made are being seen to be bearing fruit, and the people who assess our credit worthiness believe that it is a positive development.
But I also want to talk about what the SARB did in reaching out to the IMF to review some of its processes, specifically when it does come to transparency and the like. So why did the SARB embark on this process, and ultimately what was the outcomes in terms of what the IMF had to say about our transparency benchmarks?
That assessment is what I would call a race to the top for central banks. Central banks are very powerful institutions in society. We make decisions that affect the broader society, broader public. And it's very important that we are understood for the role that we play. And society has not just given us particular responsibilities. Society had also given us the protection of acting independently and insulated from political machinations. And so the flip side of independence is accountability. We account to Parliament, we table our annual report in Parliament, we appear before Parliament as and when Parliament would like us to appear in Parliament. If you ask me, we would prefer to appear in Parliament a little bit more often than we are appearing at the moment, but Parliament is busy with, I guess, with lots of other things. And so to take that accountability forward was to test our own transparency. We are a very open central bank, so we appear in Parliament once a year, and as and when Parliament asks us, but we go out and engage the South African public. We hold monetary policy forums in all the 9 provinces of South Africa, and in the case of Gauteng, there are 2. We have got what we call the National Monetary Policy Forum, and we take one to Soweto, and we engage in public talks. We do these interviews. I can talk to you, and you can ask me questions, and we go out and we engage learners in our schools to demystify this institution that is the central bank. And we just felt, why don't we test our transparency compared to the others? And instead of just doing it ourselves, let's get someone else to do it. And the IMF does many of these around the world, and we asked them to do it. And it turns out they commended our transparency. We are up there with the finest of central banks in terms of transparency. They have made recommendations on how we can improve and become even more transparent, which we will process and see what is doable within our legislative framework. It's been a very good report. We are a transparent central bank, and as I said, that transparency then makes accountability much easier for us.
Welcome back to the CNBC Africa special on managing monetary policy in uncertainty. The aftermath of the COVID-19 pandemic saw record gold buying by central banks. This raised questions amongst investors about the factors driving the ramped-up purchases and whether there were particular uncertainties that emerging market central banks were wary of. According to the World Gold Council, global central banks bought a record 1,081 metric tons of gold in 2022. Gold purchases in the following year were also strong, coming in just shy of the previous year's record. In the same period, the price of the yellow metal has surged nearly 50%, hitting multiple record highs. This has been boosted by safe haven demand amid global economic and political uncertainty. But Governor Lesetja Kganyago says South Africa's central bank didn't join the gold buying spree.
We haven't quite increased our gold reserves. Our gold reserves are roughly, give a few fine ounces here and there, we are still roughly in the benchmark. We have a strategic asset allocation that we do and that we revise every so many years. And in terms of that strategic asset allocation, gold, we hold a certain number of ounces of gold, and then we hold other currencies.
Sure.
And I think that there's a publication that ran these things. I don't want to advertise them, but they benchmarked the extent to which reserve managers were diversifying, and there have been a lot more who were buying gold. Part of it had been that finance had been weaponized, and central banks are looking at ways of diversifying. The beauty about gold is that gold is seen as a currency, but it is a currency that is not issued by any particular country, and that is the attractiveness of gold. The price of gold can go up or it can go down. You still have the gold, you kept it there. For a long time, South Africa had the thing that, well, we still have gold underground, and we didn't have to ramp up our purchases of gold, but how much gold we hold is guided by that strategic asset allocation.
That's the physical metal, but of course there's also been quite a lot of activity and attention that's been given to the digital metal, digital gold, in the form of Bitcoin specifically. So in the aftermath of some of those political developments that you did mention at the top of the interview, and perhaps even uncertainties thereof, do you know that the central bank is one of the central banks in the world that is investigating digital currencies and what this could ultimately mean? Just in the wake of what's happening in the crypto space and the rally thereof, where is the SARB's process in its investigation on a digital currency for South Africa?
Let me say that you said digital gold. No, there isn't. Bitcoin is not digital coin.
Okay.
Gold. It's a crypto asset, and that is what it is. It is not money, because for it to be money, it has got to meet 3 criteria. It's got to be seen as a unit of account. It's got to be seen as an acceptable medium of exchange, and thirdly, it must be a store of value. It might pass 2 of those tests, but it's not a generally accepted medium of exchange. Our approach then is twofold. Firstly was to understand the technologies that underpin these crypto assets and whether this technology can be used elsewhere in our central bank activities. Secondly, it was, you have people who are acquiring these crypto assets, and there are all sorts of players, and it raises the important issues of investor protection. And so the first step was through the Intergovernmental FinTech Working Group. We, through the National Treasury, Financial Sector Conduct Authority, and the Prudential Authority, declared or classified crypto assets as financial instruments. And once they've been classified as financial instruments, financial assets, or financial product, we could then put together a regulatory framework for crypto assets. As we were doing that, fortunately, because we are a member of the Financial Stability Board, the Financial Stability Board issued recommendations on how different authorities must deal with crypto assets, and that is those are the recommendations that South Africa would follow. On our side, you asked about digital currency and the technologies that could underpin a digital currency. And the question that gets asked is, digital currency for what? What is the use case? What problem are we trying to solve? Do we have a solution looking for a problem, or is there a genuine problem that must be dealt with? If there is a genuine problem that must be dealt with, is central bank digital currencies, are central bank digital currencies the solution or one of the solutions? And if they are one of the solutions, what are the pros and cons of the other solutions, and how do we engage with that? And globally, the central banks have decided to go with fast payment systems, because that is the closest to real money that you would have. That you could have this and people can settle and they are done instantly. And in the case of South Africa, we had introduced PaySharp. We were a quick follower. The first movers were the Brazilians with Pix and the Indians with UPI. And now everybody is talking about fast payment systems around the world. And in my other capacity, as the chair of the Cross-Border Payments Committee of the Financial Services Board, we are looking at interlinking the fast payment systems across jurisdictions, and what would actually be required, what kind of rail guards do you need, and so forth. And that is the route that we have decided to take. There might be countries that might think that maybe for them a central bank digital currency is the route to go. And if it works, our attitude had been that on these kinds of things, we would be a fast follower rather than a path breaker.
Okay. One last question on currency, specifically local currency amongst the BRICS nations, or the Global South, sir. At the 15th BRICS Summit held in South Africa, there was a directive of sort for central banks and finance ministers of the BRICS to investigate the use case of local currencies amongst one another, managing FX headwinds and also encouraging greater trade within the Global South. But subsequent to that, so we have heard comments from the incoming president of the US regarding the position of what has been spoken about in some corners, a BRICS currency, but just the overall narrative, in my understanding, of de-dollarization. Can you just comment on that in terms of the local use case of local currencies amongst the BRICS? Is this de-dollarization? And what is your view, sir, regarding subsequent commentary that if the BRICS are not careful, as it were, in dismissing the dollar, tariffs in the form of 100% could be forthcoming?
Firstly, governors don't respond to presidents, especially presidents of other countries.
Okay.
The concept of de-dollarization has been seriously misused. The concept of de-dollarization had to do with where countries had failed to control inflation, and because they failed to control inflation, the only currency that their public would accept would be the dollar. And you saw that in Latin America, and there are a couple of countries in Africa, including in Southern Africa, which are, for all intents and purposes, dollarized. And so when, in the textbook case, when you're talking about de-dollarization, you are basically talking of a country that wants to restore credibility in its own currency and then move away from the dollar. That is, in that country, even the purchases of local goods was done through dollars, and they are just doing this thing. But it seems to have morphed into something else now when people talk about the de-dollarization. But let me put it this way and say that the dollar is still the dominant currency in terms of invoicing of international trade. The dollar is the currency of the largest capital market in the world. And so it will still always have a role. When we started talking about settling trade in our own currencies, was to manage our own risks. Let me explain it to you this way. So for argument, South Africa has to buy oil from Angola. So South Africa takes rands, sells rands, and buy dollars to pay for oil in Angola. The Angolans receive the dollars, and they convert the dollars to the kwanza, so that they can spend the kwanza. In that process, there is margin, there are costs in the transfers. All that we said was, wait, you are selling oil, I can buy your oil in kwanzas and pay you in kwanzas. And to the extent you are buying something from South Africa, call it platinum, because that's what we sell, and instead, pay me in rand. You don't have to pay me in dollars. And so once you do that, the currencies trade amongst themselves. So in Southern Africa, we have got the SADC RTGS, the real-time gross settlement system. Through that real-time gross settlement systems, SADC member countries are able to settle some of the trade using their own currencies within our system. There is nothing wrong with that, and that's where we are going. So we said, well, we can do it here in Southern Africa. We can also do it in the BRICS. And so, what has China done? China has established RMB centers across the world. That's why the People's Bank of China decided to put a swap line between the People's Bank of China and the South African Reserve Bank. That swap line is made of RMB and rand. If the Chinese companies run out of rand, the South African Reserve Bank will supply rand. If South African companies run out of the RMB, the People's Bank of China will supply RMB. Fortunately, almost all the major Chinese banks have got a presence in South Africa, and we have not had to activate that swap line. And that is how the work works. So what did we do then in the BRICS? We did the swap line with People's Bank of China. We'll do one with the Reserve Bank of India. But collectively as the BRICS, we created the contingency reserve arrangements where we pool our currencies so that if any one of our countries require the currency of another country, we are able to access it through that contingency reserve arrangement. Nothing new.
Sure.
It's been there in the BRICS, and that is how the thing goes. And I see nothing wrong with any two countries deciding, yes, we are trading and we will settle in our own currency instead of a third currency, whatever that currency is.
Sure. Governor, as we prepare to wrap up this discussion, I have two last questions for you. While you did say that it's not the position of central banks to comment on what presidents, and particularly presidents of other countries, do say, I would humbly say that it is the position of the Central Bank of South Africa to be mindful of what actions certain presidents of other countries could take that could implicate the economic standing or monetary policy standing of the country in which the central bank is governing. And I'm speaking about U.S. President-elect Trump specifically in terms of the rhetoric around trade protection, and in terms of some of his other positioning that many commentators are saying that could lead to greater inflation. So while there's still a lot of uncertainty around what a Trump 2.0 presidency will bring for the global economy, the U.S. economy, as well as us, what lessons can be learned from Trump 1.0 in terms of how the SARB is thinking of preparing for what's to come?
I repeat, central bank governors do not respond to presidents. Okay. However, you have raised the issue of policy. That is what we respond to. What we respond to are the policies that have come through what they mean for the global economy and what they mean for the South African economy. So, to the extent that there are trade protection measures, increased tariffs that are imposed against one country or a group of countries, it would have an impact on global trade, and it will, because when you do that, other countries are also going to respond, and that is what we worry about. But we do not know what the response of those countries are going to be. Hence, we keep on flagging the issue of uncertainty. It will have an impact on that. Secondly, is that without a doubt, tariffs are cost-raising. Doesn't matter. They are cost-raising. Let's face it. You are protecting a producer or group of producers against competition by other producers. And the only reason you would be imposing the tariff is because the other producers are producing cheaper than these producers that you are protecting with tariffs. And so, goes without saying that it will have cost-raising effects. Now, if this happens in a major economy, that the costs in that major economy go up, imported inflation in a small open economy like ours will go up. And to the extent that that might be accompanied by the depreciation of the currency of a small open economy like ours, we could end up with a double whammy of rising inflation and a weaker currency that generates inflation. And that is what the central bank will then worry about and decide whether this is a once-off shock or it is something that would have second-round effects. And if it will have second-round effects, that is what we will respond to.
And finally, in terms of 2025, one of the big things for South Africa and the continent, of course, will be the hosting of the G20 in our land, in Johannesburg. A whole lot of other meetings happening as well. But can you just also help us understand how you're thinking about the G20 and the significance for South Africa and Africa? I do know that the governor has got a lineup of meetings related to the G20 this week, but just your thoughts and expectations thereof, sir.
This is the first time South Africa chairs the G20 since the G20 was elevated to the head of state level. The last time South Africa hosted the G20 in its previous guise was in 2007, and that was in Cape Town. That was when the G20 was just ministers of finance and governors of the central bank. We are right at the tail end. The first time the G20 was held at a head of state level was in the US in November 2008. And so we are the last country in the G20 to be the host of the summit. You could almost call it the World Cup of policy making. But even a soccer World Cup or a cricket World Cup will last for a month or so. This is a whole year's affair. So you are going to see a lot of activity across the country with respect to the G20. South Africa decided that being the chair of the G20 in the year where the African Union had been now welcomed as a permanent member of the G20, which means the African Union has a seat at the summit of the G20, that we will elevate African issues in the G20. And for the finance track, it's at least as far as it relates to the central banks, we decided that we are going to elevate the issue of cross-border payments. Africa has got the Africa Free Continental Trade Agreement, and that trade agreement, people forget. When you trade, the trade must be settled. And the settlement takes place through the payment systems, through money. And there it is who's going to be trying to get African countries to settle in their own countries, in their own currencies, is going to become important for us. And we will bring to bear the work that is being done in the Cross-Border Payments Committee onto the African continent to facilitate the movement of the settlement of trade and the movement of cash on the continent. Give you an idea, to transmit money, $100 between Johannesburg and Harare, you will pay like 8% before we talk about the exchange rate and all of that. That means that $100, by the time it arrives in Harare, is no longer $100, it's like $92. One of the goals set by the United Nations is to bring down that cost of remittances, and we would like to see that coming through. We might not be able to achieve all of those goals of integrating the payment systems this year of the South African presidency, but we will definitely take it to another level. And to do that, what we have done in SADC was working with the IMF and the World Bank to lift that work and start in Southern Africa to make sure that those flows actually take place.
Well, I can say that we are looking forward then to a full year of World Cup policy making, sir, and also looking forward to future conversations with you in the next year. But Governor, thanks so much for giving us your time this today.